It's 9 p.m. and Marcus is standing on the shop floor of his machine shop in Ohio. He's been crunching numbers all week. That new CNC lathe could double his production capacity. The machine costs $800,000. The loan fees alone would run him over $20,000. Money he doesn't have lying around. And then he heard about something. Something the SBA announced last September that almost nobody's talking about, and it could save him, and maybe you, tens of thousands of dollars. Here's the signal. The SBA has quietly waived virtually all loan fees for manufacturers. Not reduced, waived. 0%. Through September 2026. On a loan of $950,000, that's up to $28,500 you're not paying. Money that stays in your business. And when you combine that with falling interest rates and a brand new revolving credit program for manufacturers, this is the best financing environment we've seen in years. Let me back up and explain what's actually happening here. Every year, the SBA sets fees for their lending programs. These fees fund the loan guarantees that make SBA loans possible. Normally, if you're a small business getting a 7A loan, you're paying anywhere from 2 to 3.5% of the loan amount up front, just in fees. That's real money. On a $500,000 loan, that's $10,000 to $17,000 before you've even received your first check. But starting October 1st, 2025, the SBA made a significant policy change. They announced fee waivers specifically for manufacturers, and the scope is substantial. For 7A manufacturing loans up to $950,000, the upfront guarantee fee is now 0%. Not reduced, eliminated entirely. And for 504 loans, those are the ones typically used for real estate and heavy equipment, both the upfront fee and the annual service fee are waived completely. This waiver runs through September 30th, 2026. After that, the program is scheduled to expire. This is a defined window. Now, why is the SBA doing this? It's not random generosity. There's a policy objective here, and it's one that's been building for several years. Reshoring. The push to bring manufacturing back to American soil. After years of supply chain disruptions, there's genuine political will behind supporting domestic production. The SBA stated explicitly, quote, "The fee burden reduced will empower more small manufacturers with capital to increase hiring, growth, and to reshore jobs and supply chains." So this isn't some obscure technical adjustment. This is targeted policy designed to make capital cheaper for manufacturers specifically, and it's working quietly in the background. The fee waivers apply specifically to manufacturers classified under NAICS sectors 31 through 33. That's the federal coding system for industry classification. NAICS 31 through 33 covers basically everything you'd think of as manufacturing. Food production, textiles, wood products, plastics, metalworking, machinery, electronics, transportation equipment. If you're making things, physical products, there's a strong chance your business qualifies. And that's important because the savings here are substantial. Let's do the math. Standard 7A guarantee fees run about 3% on loans over $350,000. On a $950,000 loan, that's $28,500. With a manufacturing waiver, that fee is 0. That's $28,500 staying in your business instead of going to loan costs. And this comes at a particularly favorable moment for borrowing. Current SBA 7A loan rates range from 9.75% to 14.75%. That spread exists because the exact rate depends on loan size and repayment terms. Smaller loans with shorter terms often have higher rates, while larger loans may qualify for lower ones. For 504 loans, the news is even better. SBA 504 rates typically fall between 5 and 7%, significantly lower than 7A loans, plus the fee waiver. Here's context on the rate environment. The Federal Reserve cut rates by a quarter point in December 2025. That was their third cut in the back half of last year. And analysts suggest if we see 1 or 2 more quarter-point cuts in 2026, the prime rate could drop to around 6.25% to 6.5%. That matters for SBA loans. Why? Because most SBA 7A loans tie their rates to the prime rate. When prime drops, your variable rate drops with it. The trend line has been favorable. There's another development worth knowing. Effective March 1, 2026, the SBA expanded allowable base rates to include SOFR and Treasury note rates, 5-year and 10-year. That's technical, but here's what it means practically. Lenders now have more flexibility in how they structure loan rates. More options for borrowers, potentially more competitive pricing. Now, let's talk about the MARC program. That stands for Manufacturers Access to Revolving Credit. It's a relatively new SBA initiative specifically for manufacturers. Unlike traditional term loans where you borrow a fixed amount and pay it back, MARC offers revolving credit. Think of it more like a business line of credit. You draw what you need when you need it. Pay it down. Draw again. It's designed for the operational realities of manufacturing, where cash needs fluctuate with production cycles. Raw materials come in big shipments, customer payments arrive on their own schedule. Having flexible working capital access can make the difference between growing and just surviving. So, here's what you actually need to do if you want to take advantage of this. Step 1. Confirm your business qualifies under NAICS codes 31-33. This is straightforward. You can find your NAICS code on previous tax filings or just look it up on the Census Bureau website. Takes about 2 minutes. Step 2. Understand the timeline. SBA loan approval typically takes 60 to 90 days from application to funding. That's 2 to 3 months minimum. The program expires September 30th, 2026. If you want to close before then, you need to be starting your application process. Basically now, not next quarter, now. Step 3. Compare your options. For equipment purchases under $500,000, you want to evaluate both 504 loans and 7A loans. They serve different purposes. The 504 loans, 5 to 7% rates, both fees waived, are typically used for major fixed assets, real estate, heavy equipment, major facility improvements. The 7A loans, 9.75 to 14.75% rates, but upfront fees now waived, offer more flexibility for general business purposes. Every business situation is different, and you should absolutely talk to your accountant before making any moves here. But the numbers are worth running. Seriously. Step 4. Find an SBA preferred lender. These are banks and credit unions that have been pre-approved to process SBA loans. They can move faster and know the system. You can search for SBA preferred lenders on the SBA's Lender Match tool. Put in your zip code, select manufacturing, and you'll see who's active in your area. And here's something worth noting. With the fee waivers in place, lenders are motivated to close manufacturing deals. You may have more negotiating room than you realize. Here's what the broader data shows. Lending to small businesses has shown signs of growth, coinciding with lower interest rates. The market is opening up. After several years of tight credit conditions, manufacturers are finding doors that were closed are starting to open. Capital is flowing again, and the fees are waived. Now, and I want to be clear about this, your mileage will vary. What works for a 50-person precision machining shop might not work for a 3-person custom furniture maker. The principle holds. Cheaper capital is available, but the execution depends on your specific situation, your cash flow, your growth plans, your existing debt load. Here's a calculation worth doing tonight. Take whatever equipment or facility expansion you've been considering. Look up the standard 7A guarantee fee schedule. For loans over $350,000, the fee is usually around 3%. Multiply your loan amount by 0.03. That's what you'd save right now. NerdWallet reports that, quote, with lower interest rates and an expected economic rebound in early 2026, relief for small businesses may finally be on the horizon. This isn't just one policy in isolation. It's a convergence, waived fees, lower rates, new credit programs, and favorable lending conditions all hitting at the same time. For manufacturers who have been waiting for the right moment to expand, to buy that equipment, build that facility, hire that team, this might be that moment. And look, I know that sounds like hype. Every year there's some new program, some new opportunity, some new thing you're supposed to jump on. But this one has real dollars attached. Up to $28,500 in savings on a single loan. That's not a marginal benefit. That's money you can put toward better equipment, toward training, toward a safety net for the inevitable slow months, toward actually building something that lasts. If this is relevant to your situation, and you're thinking about acting, I'd suggest you start your research this week. Call an SBA lender. Have a real conversation. Understand what you'd qualify for. Understand the timeline. Understand whether the math works for your specific situation. Then, make an informed decision. And if you found this information useful, if this is the kind of signal you want to catch before it passes, consider subscribing. We track these opportunities so you don't have to. Manufacturing is having a moment right now. Policy is aligned with it. Capital is available for it. The question is whether you're positioned to take advantage. Remember Marcus from the beginning? The machine shop owner looking at that $800,000 CNC lathe? He started his application 3 weeks ago. Under the old fee structure, he'd have paid over $24,000 in loan fees. Under the current waiver, $0. That $24,000 is buying him tooling and training instead. The window closes September 2026. That's 6 months away. If this applies to your business, you know what to do. A quick reminder, this content is for educational purposes only and isn't financial advice. Always talk to a qualified professional before making major financial decisions. Every situation is different, but the signal is there. Manufacturers have the best financing environment we've seen in years. The fees are waived, the rates are down, and the window is open. For now,